What's good, everybody? Welcome back to the Millennial Bridge. I'm your host, Is-Rael, and in today's video, we're going to be going over revenge trading and all the details behind that. So let's get into the tips and trick video on revenge trading. Alright, so the market just opened up. Got my watch list right over here. I believe I take 5 trades in total. We'll just skip ahead to all of them. I get my buy order all set. I was buying in at $7.68. I typically do 50 shares because I'm expecting to trade with $500 when I get into the real market. Now, again, you can spot what I did wrong. I should have placed a take profit level and a stop loss level to limit my risk. Instead, I just bought into the stock, so let's see what happened. A few minutes go by and the stock really hasn't moved. In the meantime, I placed my take profit level and my stop loss once I get a feel of where I think the stock's going to move to. These are just estimates. I was planning to stop myself out early or take profit. So let's see what happened. Bam, I'm in the market. As you recall, when stocks stay at a set price level and they don't move within 1 to 2 minutes, it typically means they're probably going to fall in the next minute or two. It's a gamble if your stock isn't increasing incrementally by the second, by the minute. It's going to have a reversal to the downside, so just be advised and be careful. At the same time, if you limit your risk exposure by moving up your stop loss, that may be all you need. And all of a sudden, the stock pops up to $278, and that's already a 13-cent gain. And in my head, I wanted to close the position and take profit early. I was debating on whether it could reach that next resistance level and stop me out at my take profit level. So I waited a little bit. This is a great tactic for you traders. When a stock's pushing up, you should be ready to close the position just in case it falls within the next seconds or minute. It's not worth the risk. Take the money and walk away. And I walked away with $14. So that trade you just watched, that is perfect execution of when a trade goes right, and that's how you should model all your trades in the market. Minus that one flaw. Did you notice, as soon as I got into the trade, after 1 to 2 minutes of me sitting in the market, the stock began to go on the rise. If your trade's not doing that in the first 1-2 minutes of you being in the market and you're day trading, something's wrong and you should either pull out your account or move up your stop loss to limit your risk. Luckily for me, the stock went on the upside. Before it crashed and fell back down, I decided to pull out my account and take profit early. I want you guys to watch this part. Now, this was the same stock I had just sold, and as you can see, it's on the rise upward. Now, instead of me just jumping right back into the market, I want to wait. I want to see, hey, where's this stock going? Is it going to hit a resistance level pretty soon? Is there a better spot for me to buy in than me just jumping straight into the market? And keep this in mind with all your trades, not just this one. I see it popping upward. I see it has potential to keep going. Now I'm looking for a spot to buy into the market. So about 10 minutes later, I'm looking at BOXL and it's continuing to rise, and I have my order all set and ready to go. So I immediately get into the market. Again, I didn't set a take profit level or a stop loss. Big no-no. Don't do what I'm doing when it comes to that aspect in trading. As I'm in the market, I'm trying to calculate where to put my take profit level and my stop loss because I didn't do it prior. I'm ready to submit it. Order goes through, and now I'm in. Right as I noticed the stock began to fall and approach my stop loss level, and based off of my analysis, I thought the stock had potential to continue on the upside. So what I did is I moved my stop loss down a few more cents to give me some room so that way the trade wouldn't stop me out. And then I insert my new order. Again, your goal is only to make 10 cents off a trade, and then you should just walk away. The trade begins to move upward. All of a sudden, out of nowhere, the stock begins to fall and it's already at the $3 mark. In my head, I was thinking, hey, close the position early rather than take the extra 10 cents loss due to my stop loss being at $2.90. So I got my finger on the trigger, and then I closed the position. Although I closed it at $2.91, that was 1 more cent I could have lost. And now I'm playing catch up. I just gave my gains right back to the market. What did we just learn from that trade? Basically, if it's stalling, take yourself out of the market. You don't want to be in stocks that are just sitting there. You want to be in stocks that are moving upwards in the seconds, in the minutes, rather than exposing yourself to stocks that are just stalling out for minutes upon a time. Let's see the next order I take. Alright, we're back and we're looking at the same stock yet again. Now, what you're about to watch is something you don't want to do as a trader, and this is called revenge trading. Revenge trading is when you've already lost money or you've given it back to the market, so your gains are now either 0 or negative, and what you do is you increase your share size. So mine, I was trading with 50 to 100 shares. Now look at it. It's at 200 shares. You don't want to revenge trade, and you don't want to increase your shares when you've already given back money to the market. You should practice with the share size you anticipate to be using when you enter the real market to give yourself a better estimate. Realistically, I did this to prove it to myself that I could win money back in the paper simulator. In real life, I may not have 200 shares worth of money to spend on a stock. Therefore, in the simulator, I shouldn't be trading with 200 shares. Do you get the point? Cool. So I got my order all set up, and right off the bat, I'm already down $10. Again, you can see the stock just stalling there. Probably a good time for me to exit the market right now and walk away with my 4 cents. It is a patient game, best believe. I saw the market wasn't doing anything. I saw an opportunity to close my position and still maintain a break-even profit level. So that's exactly what I did. Right before I closed the position, it popped up, and now it's at 321. Eventually, the stock rose all the way up to 323. I had secured some profit, and I was ready to close my position and just walk away. So finally, it hits the $3.25. That's a $10 profit. All of a sudden, it takes me out the market. Profit level achieved. That is a $26 gain. So with 200 shares and a stock moving 13 cents, you have the potential to make $26. Going on my 4th trade, I saw the stock continue to rise, so I bought in one last time. I bought in without setting my take profit levels or my stop losses, and I still had a quantity of 200 shares. I eventually set my take profit levels and stop losses, and as the stock continued to rise, I eventually decided to close the order and take profit early, like a smart trader would do. There we go, order executed. So I took one last trade. This is something you don't want to do. You don't want to overtrade. After you take about 5 trades maybe, I would call it quits and just exit the market. And again, I'm being so stupid right here. I don't even have a stop loss and it's falling. If you can walk away with even just $5 worth of profit, paper money or real money, I would say you're doing something right. Oh, wow, just when I thought I was done. Nope, I got one more trade for you guys, and apparently I'm already in the market at 353. Set a take profit level 7 cents above. Let's see if I get there. The stock rises upwards and then it takes me out the market, an extra $14 to make up for that last loss I incurred. So now my total profit for the day, nearly $46. So as you can see guys, there's my trades for the day. Now I know they were revenge trading, I know they were increased share size, so the numbers are a little bit skewed, but if I were to put that in perspective of the 50 share size, right now, I would say I'd have $5 to the green trades and about $10 losses to the red trades. When you add that all up, I had maybe you could say $20 gain for this day in reality. So again, what did we learn from the market? Don't revenge trade by increasing your share size in the simulator. It's only going to skew the results and give you a less than accurate representation of where you're actually at as a trader. Set those stop losses. Set a number for yourself on the maximum amount of trades you plan to take for the day, and leave it at that. Thanks for watching the video, everyone. If you enjoy our content, feel free to like, subscribe, comment, or just come check out our website and see what we have to offer for you guys. I will see you in the next video.